All right. Hey guys, man, it's been a long time since I've done a short form video like this on this channel. The past few years I've been mostly focused on maximizing crypto trading opportunities, running our wealth building community at the Skill Incubator, and also doing the We Talk Money show with Travis and Nikki. But I've been getting a lot of questions from you guys that want to see more of the shorter form videos that I've done for many years. Actually, it just dawned on me. I've been doing Bitcoin videos for almost 10 years now. Next year, it'll be 10 years. And, it hasn't been a smooth journey. Like, there have been many times over the past decade or so that I've really questioned if I should even really be doing videos. It's been just a constant game of shadow banning, and YouTube even took my channel down one time, and playing the constant game of whack-a-mole with impersonators and scammers. And I've just been really disgusted with the quality of crypto content, really since like 2017. As one of the first guys that was doing videos about Bitcoin, it's just really hard to watch a lot of the cringiness that's happening. But anyway, I don't know. I'm back. I want to do more videos for you guys. And we're also going to be doing a clips channel for the We Talk Money show. So we're going to take some of the questions and give you guys just shorter, like 2 to 5 minute videos answering specific questions if you guys want to drill down to the topics. But anyway, in this video, I just wanted to do some content showing you guys some of the strategies that have helped me make millions over the past several years in crypto and specifically Bitcoin. And I'll just kind of pull this up. But a lot of you guys have been asking questions like this, like, hey, Chris, do you mind doing a video one day walking us through your trading strategies? It'd be very helpful. And this person was saying, hey, how do you decide when to take a position? What are the rules and the criteria that you follow? What's your execution process? And how do you define risk and stop loss? How much percentage do you allocate initially from position size? And what's your method of taking full position, scaling? So this is like a really loaded one. And I don't know if I'm going to be able to hit all angles from that question today, but I wanted to do like a 30,000 foot overview and just show you guys where I kind of start and the major components of my trading strategies. And look, I'm not here to convince anybody that you have to actively trade. I hear from people that say, hey, Chris, why should I trade? Shouldn't I just dollar cost average or buy Bitcoin and hodl forever? If you want to do that, that's perfectly fine. There's nothing wrong with that. I think like maybe 5 years ago, I did a video called should you trade Bitcoin or just hold it? And the long and the short of that is the goal of active trading is to hyperdrive your gains, right? To instead of making, 100 or 200% a year on Bitcoin, whatever the average returns turn out to be, you can seek to hyperdrive that and really grow your wealth quicker. And even if you aren't a full-time professional trader, if you just understand some of the mechanics of how trading works, and specifically like what are the best times to buy Bitcoin, which I did a video on, and how do you size your positions, even if you don't look at yourself as an active trader, what that's going to do is give you confidence to hold when prices crash, and just remove some of the guessing out of it. Going back to 2013, I can remember seeing people buy when prices are high and then panic sell the lows, right? I mean, that happens every market cycle. And I've heard from thousands and thousands of people, literally emails and messages and DMs from people that have done that, even after watching some of my videos showing you how to avoid it. So hopefully in this video, I can just add a little more color on that. And some of this stuff is still relevant from the book that I wrote back in 2015 when Bitcoin was like $200. I look back and I laugh at, how outdated some of this stuff is. And I've been thinking about writing an updated version of this book. It's called Bitcoin, How to Trade It for Serious Profit. And my goal with this book initially back then was to convince all of my friends and frenemies in the trading space back 10 plus years ago that, hey, listen, Bitcoin is going to be huge. I know nobody's trading it, but this is why I think it's going to be big, and just some of the early strategies that I used. But anyway, if you want to get that, I'll show you a link where you can still download it, even though it's quite outdated at this point. You can go to skillincubator.com /Bitcoin book, and you can get that for free. We used to ship physical copies, but there were so many international ones that they kept getting returned. So if you want to get that download, you can get that. Anyway, let's go ahead and just jump into the content piece of this. Really, I have like at a 30,000 foot overview, I have a 5-step trading strategy process that, again, even if you're brand new to trading, I think anybody can understand this conceptually. Granted, this isn't going to be all the nitty gritty and everything you need to know, but I think it's a great starting point. The first thing is asking the question when you look at the market, doesn't matter if you're watching this video today or maybe in 10 years, what is the current phase of the market cycle that we're in right now? Okay. Bitcoin is very cyclical. We have big boom and bust patterns, and it's important to know where you are in relation to where price was in recent history. And I did this video that can shine more light on the market cycles or the phases in the market cycles. I'll link this up in the description as well. So I won't go into depth with what those cycles are or what those phases of the cycle are. But once you know where you are in the grand scheme of things, the second step is to find trade setups that work in the current market cycle phase, right? Because different setups are more successful when you're in different areas, right? So, for example, if you are in a phase one accumulation pattern, like we were back here in, early 2020, the setups that work there are going to be much different than when you're in phase two, where you're in a bull trend, right? And that's going to be very different from what works when price action's choppy, or in a bear trend, or in a highly volatile, choppy scenario, right? And you want to be nimble. You basically want to, when you determine where you are in the grand scheme of things, you want to focus in on setups that actually will work, right? If you're trying to buy breakouts or buy dips when prices are crashing, and you're on a phase three on a fast crash, you're going to get completely demolished. Or if you're trying to use the shotgun approach and buy a whole bunch of altcoins and shit coins when Bitcoin shut the music off. Bitcoin's the DJ, and it determines when the party stops, right? If you're trying to buy a whole bunch of low volume, low quality shit coins, and Bitcoin's selling off, odds are is breakout patterns and dip buys and bull market setups on altcoins aren't going to work that well, right? So the third thing is, once you find the setups that are working in the current market environment, then you want to plan your trades ahead of time. You want to look at potential entry areas, like, where would I buy? Am I just guessing, or do I have a definitive price zone that makes sense for a dip or a breakout, or some kind of bull market structure pattern? And then you want to find out, what is my stop zone, right? Even if you're not going to place manual stop market orders on exchanges, you want to know, like, where would I cut this thing off? Because the last thing you want to do is become a bag holder, right? Or a cult follower where you get a tattoo of some shit coin that dies, right? So you want to define, okay, if I'm buying here, if it doesn't work, where do I get out? And then when you back out the math that way, that can help you determine position sizing. Basically, how much capital should you put at risk? And I always think it's smart to start by saying, what's the most amount of money, dollars or euros or whatever fiat currency you're thinking of that in? What's the most amount of money I'm willing to lose on a trade? And this is different from how rookies think about it. A lot of people, when they buy Bitcoin, they just get starry eyed and they're like, how much money am I going to make on this? But what you want to do, and what professionals know, is step one is you got to think about the downside, and you got to cap the downside risk. That way, questioning yourself, and you buy at, say $100 on a market, Bitcoin or something else, and then, it falls and it breaks that zone, and then you become a bag holder, and whatever the coin is, you're down below $10, and you're like, how did I hold this thing and lose 95% of my money, right? I'm sure somebody's listening going, yep, I've done that. And then the fourth thing is, you actually pull the trigger on your entry strategy, right? When price hits a zone, or when you have a price pattern that plays out, you actually pull the trigger, you hit buy. And then the fifth step is you manage trades according to what I call the no regrets risk management or trade management strategy. And what that means is basically, how can you manage your trade in a way that would leave you with no regrets, no matter what the market did, right? Because when you're trading and investing, I don't care if it's crypto or stocks or even real estate or venture capital stuff, right? Whenever you're in a position, you are placing money at risk. So you're basically taking a bet with incomplete information, right? You don't know all the facts. You don't know what, every market participant is thinking and doing. So you're taking action with incomplete information and an uncertain future, right? We just don't know what's going to happen in the future. And so the best way to manage positions that I found is you manage them in a way that would leave you with no regrets, right? Say Bitcoin went to $1 million tomorrow. Great. You still want to have something on. Or if it crashed 50%, you probably would have wanted to adjust risk and take some profit, right? So I'll just walk you through an example of how I kind of executed this over the past couple of years during the latest boom cycle, right? So going back to early 2020, we had the March COVID panic where price sold off. We got blessed with lower prices. And what happened is price panicked from about 10K down into the 4K range. And we were there actively in our Discord channel buying the shit out of that dip, right? So what happened is this was a valid setup, which when Bitcoin sells off over 30% or more in less than 3 days, you can backtest that and just see how aggressive those bounce plays typically are. And then over the next few months, we built into some longer accumulation type setup buy and hold patterns, right? Once we broke out above the 12K zone, this is where we were in the second phase. And when you're in phase two, where you're in a confirmed bull market, this is where you can buy dips, you can buy breakouts. And it's really important to predefine profit targets where you say, hey, listen, if we hit this price, I'm going to sell a portion of this position or the whole thing, right? And the way that you determine that is you ask, well, how can I manage this in a way that would leave me with no regrets, no matter what the market does, right? And then when things get overly aggressive, or when you have a spidey sense that, things are just unsustainable, that's usually a good time to start counter trend trading. And I'll just give you an example. So here on May 12th of 2021, I had a lot of conviction that the market was overheated. And I sent this little tweet storm where I said, there's really only a few days out of the year where I make major changes to my portfolio, right? Like major position changes, not just taking profit on little trades here and there. I said, today was one of those days. I took some profit on, some of my largest positions. And I said, instead of trying to guess where the top will be, I follow my, look at that, no regrets trade management plan that helps me participate in future bull runs while protecting my downside. Basically, I scale out into major profit targets, right? And if you guys that were around in the crypto markets around this time, the narrative was 100K, 100K, 100K. Bitcoin's on the way to 100K. And for me, it was the market sentiment that just got way too bullish, right? There was nothing inherently bearish about the technicals up here. The fundamentals, the on-chain metrics were all bullish. It was basically market sentiment where people were just overly bullish, right? We were overly greedy. And when I see that, I start to get freaked out. And I said, we've seen some incredible gains over the last 6 months, but market sentiment's starting to freak me out. When noobs start bragging about their easy gains, the market usually punishes them. And I'm not saying the trend is over, but I'm having flashbacks from 2017. Guys, I've been through basically every market cycle that Bitcoin's had, right? Prior to like 2012, I wasn't paying attention to Bitcoin. In fact, at that point, I thought it was a scam. But there really wasn't liquidity on markets, right? It wasn't until 2013 that we could actually trade this stuff with liquidity. So I've been through it all. I've seen literally all of Bitcoin's price history, and I have a really kind of in tune sense with market sentiment and when things get overly bullish or bearish. And then I kind of wrapped up here saying at the end of the day, we have to manage trades based on our own risk tolerance and goals. If you've made life-changing amounts of money over the past year, ask yourself questions like, how would I feel if insert market fell by X%? Would I regret not selling some? Right. And this is what I mean with step 5 in that no regrets trade management strategy. Because getting in and buying, that's really the easy part. The harder part for a lot of people is, what do you do after you buy something, right? Because it can be stressful when you're in a lot of profit. You're like, this thing's going up, but when do I sell, right? And again, in this video, this was mostly focused on Bitcoin, but this also applies to altcoins and maybe even NFTs. But the big idea is to, no matter what you're doing, even if you consider yourself a buy-in hodler, entry price does matter. Knowing where you are in the market cycle matters. Even if you have, low time sensitivity where you're like, look, I'm willing to hold this forever. I can't tell you the amount of times that I've heard from hodlers that panic sold market lows because they didn't think about their entry price. They didn't think about risk management, and they couldn't stomach the drawdown, right? The mental side of this game is so important, and a lot of people just don't have it. So I think having a structure like this where you have guidelines or some kind of approach that removes some of the guessing and the subjectivity, I think can just be really helpful. So I think that's it for today, guys. Again, it's been a long time since I've done education content like this. I really miss it. And so if you guys enjoyed this, obviously like it up. Leave a comment if you have a question for something you'd like to see on a future video, and maybe I'll pull one and do one for you. So thanks for watching, guys, and I will